Hi everyone and welcome to the Find Out Friday. It's our first edition of the new named 2019 session. Today I've got with me Lauren and Simon from Smartmove Home Loan Brokers. They're our preferred brokerage firm, and we're going to talk today about the Royal Commission into banking, or should I say the Royal Commission into the mortgage industry. What's that about? I mean, I thought it was the banks that were the issue here.
Yeah, to say that the industry's been stunned, John, is an understatement. Obviously, to see the recommendations come through Monday a week ago was devastating for the mortgage advice industry. Obviously, what set out as a reform package for the banks turned into an attack on the mortgage advice industry, which has just been super disappointing.
Yeah. So it's a witch hunt, isn't it, really, when you think about it? The concept of the Royal Commission to banking was supposed to be something of a benefit to consumers. I fail to see that the attack on the advice element, particularly, and the broking industry, has any benefit to consumers, when you guys actually provide a massive benefit to consumers.
Yeah, absolutely. There's been various articles written. Obviously, I haven't done the actual numbers, but they're talking about a $2.6 billion kick to the major banks off the back of this. Look, even if you just take away the mortgage broking industry itself, it's all about the customer, and the customer is the biggest loser from the Royal Commission. Yeah,
look, we find, in dealing with you guys particularly, what those consumers give us the feedback in is they never get this service from a bank, right? And the beauty is it doesn't cost them anything in reality. All things are passed on, yes. But to actually getting someone to provide them with advice that is, I suppose, in a way not really confined to one product or the other, you've got multiple products to offer, to have that taken away, it just is a crazy concept.
It is, and it's one of those things, John, that the consumer is now going to be the loser in this situation. At the moment, the way that Commissioner Hayne has released his report Monday a week ago, it states that the way the brokers get paid at the moment is by a remuneration from the bank. He wants that to then be replaced by a fee-for-service model paid by the consumer. So in the end, it's the consumer that's going to lose.
Yeah, and it's a direct thing, and you're dealing with one bank or one product.
Exactly.
It's almost like when I read the segments of the report, that this report's been written by a bank. It just had that smell to it. And call me a conspiracy theorist, I don't mind. But this really reeks, or it smells.
Yeah, I probably wouldn't want to specify one particular lender, but look, it definitely, when I read through the recommendations, particularly around the mortgage advice industry, it definitely felt exactly the same way to me.
Yeah.
And if this comes about, it just means there's going to be less competition, which means increased fees and higher rates for clients. So again, it's not the way that we anticipated the report was going to come out.
So no one wins except the banks?
Basically.
I mean, it's astounding. In Australia, we don't expect this sort of stuff. You expect a Royal Commission to actually have a proper outcome in relation particularly to consumers. And now we're facing a crazy situation. So from a political perspective, I imagine there's going to be a lot of work going into prior to the election to actually inform the public as to what this means to them, because they're the ones that lose.
Yeah, well, what's really important to realise as well is that we've already got a concentrated marketplace when it comes to the banking environment. People talk about the big four, the perceived oligopoly. The reality is the model that Commissioner Hayne has really zeroed in on is one that was actually based off a model in the Netherlands, and it's basically the Dutch model, which is a fee-for-service model whereby both the lender charges a fee to the customer and the broker does, to try and ensure channel parity. And look, I can't remember the exact statistics, but the concentration in the Netherlands market since they introduced this particular law, I believe that the number of lending institutions actually is actually halved. So you can sort of imagine the decimation of competition, which is the opposite of what politicians should be trying to curate in our industry, is actually trying to promote competition. And when you look at an industry that, when I started 15 years ago, had around 25% market share, mortgage brokers only accounted for about 25% at that particular time, we've now grown to 60% of all mortgages. Now, to me, that doesn't indicate any systemic issue. No. And when you actually look at the stats, of the 5,000 complaints in the industry last year, only 29 of them were based around mortgage brokers.
It's the banking industry, isn't it?
It's the banking industry.
Yeah, 29 around mortgages.
Which is why it was called the Royal Commission into banking. Yeah.
And what people don't realise as well is that it's not only going to affect the mortgage broking industry, it's also going to affect the second and third tier lenders, the building societies, the Newcastle Permanents, all those smaller lenders that rely on broker business for their own business. So that's where the choice for the consumer is going to be completely gone if this goes ahead through Parliament.
So what are you suggesting people do about it? Because a lot of our clients, we've been out there saying, hey, have you thought about this? What are the implications to you?
Yeah.
This is an education process, isn't it? And getting people to get active.
Yeah, I think the biggest thing is that the mortgage broking industry and the remuneration model, it's not the easiest thing to describe, in the fact that obviously we're acting for the customer, but we're getting paid by the lender. And so, obviously that's where Commissioner Hayne obviously saw an inherent conflict. But I would argue it's a very manageable conflict, and there's a number of different ways that the industry's combined industry forum has been working to manage those conflicts. So look, the advice that I would say to consumers is just to, if you've had a good experience with a broker, just sing that from the rooftops. Let everybody know. We've got to help educate policymakers as well to really understand what it means long term for consumers and for those smaller lenders, and competition in the Australian marketplace. So there's actually a petition out which has been organised by the Mortgage and Finance Association of Australia. So I would encourage everybody to sign up to that, and basically to then, off the back of that, then email their local member of Parliament and just let everybody know about what the outcomes may be.
And on the bottom of our email there'll be a little link for people to do that, because we feel really strongly about this. We know that this is a great service for our clients and what you do for them, and they sing your praises. So for us, that's all we need to balance that out. So thanks so much for joining us. Anything else you guys want to add before we go?
No, thank you for everyone's ongoing support for our industry. I think it's an industry that shouldn't be removed, and there's more clients out there that we want to help, and we want to turn that 60% into 100.
Well, it exists because the clients want to use you. That's the bizarre thing.
Yeah.
If the clients are speaking that way, politicians should listen. Thanks so much, appreciate that. So that's the end of our session today, and look forward to joining you next week. Thank you.